let's move on then. The first management on the show is Patanjali Foods. The company will acquire the entire non-food business from Patanjali Ayurved for around 1,100 crore rupees. Patanjali Foods, which is mainly into edible oils. This deal will help the company to have dental care, skin care, hair care, as well as home care. That will be added in its portfolio. Well, Mr. Sanjeev Asthana, the Chief Executive Officer at Patanjali Foods, joins us on the show. Hi, good morning, Mr. Asthana, and congratulations on this deal. So good news for your shareholders. Now, the acquired business, in the last few years, it's been growing at roughly around 6.5% approximately. It's a good business with good margins, but what is the growth trajectory you can see from here on?
Just take back to two other previous acquisitions that we did. The biscuits that we acquired went up nearly 60% in 2 years' time. The foods business that we acquired went up 50%. So we are reasonably confident that this growth rate, under Patanjali Ayurved, it did up 6.7%, we'll try and exceed that by a large margin. And that effort towards rationalizing our workforce at the ground level, taking steps on the distribution that we get a significant boost on. Likewise, in terms of the portfolio rationalization and others, our belief is that we will focus a lot more on the growth momentum, and the opportunity is very large there. And under the listed entity with a much larger portfolio basket of products that we have and the management depth that the listed entity has, I think Patanjali Foods should be able to grow it much faster than what it has grown so far.
All right, Mr. Asthana, let's get a number out of you. The past two acquisitions grew by 50 to 60%. But this one, what could it be realistically? Should you be guiding for a number like 30, 40%, or do you believe that you can do even better? Yeah,
no, so I'll share that with you. I think broadly what we've done is that we've targeted to keep a range of 12 to 15% growth at the minimum, and that is across the category, which includes all the other 4 food businesses categories that we have, and including this one. So I believe that 15% growth should be reasonably possible because, the strength that the company has, we should be able to accomplish that across the portfolio. The non-food alone, our belief is that the opportunity is much larger. We have taken several steps, including getting new brand ambassadors for our toothpaste and care sector. And we believe that the growth momentum is there, the demand is picking up, and we should be able to exceed even 15% for the non-food side of the business.
Yeah. Got that, Mr. Asthana. Good morning and congratulations, sir, on this one. Could you give us a sense on margins here? What are the levers available to you within this portfolio that you've acquired? Which is the business which has got the highest margin levers according to you, where you'll be able to grow that? Just give us a sense, sir.
No, sure, absolutely. So we have the highest margin business is obviously Dantkanti, which is a very marquee brand, which is nearly close to 50% of the entire category where Patanjali has a leadership. And including, in terms of the control over the raw material, where the margins exceed nearly in Dantkanti of more than 24% EBITDA. Similarly, in the skin care segment, we've got nearly 14% margin. You have it on the screen. So the plan is that, in terms of the raw material sourcing on the supply chain side, bringing in the efficiencies, working at the distribution level, the efficiencies. So today, currently, what we see about 18% EBITDA in the business, we'd like to certainly this to exceed by 200 basis points over next year and a half, when all these synergies start to kick in. And we'd like to see this closer to 20% plus in terms of the EBITDA margins in the business. And it will take some time.
So essentially what you're saying is in a year and a half, right? 15 months or so, you'll
about
be able
18
to...
months is our expectations.
18 months.
Yeah. So we are working on it right now. And,
okay.
So there are multiple, just to finish that point, we are seeing multiple synergies at 3 levels. One is at distribution level. We believe that we should be able to cut substantial cost, rationalization of the ground level forces. And third is on the supply chain side. I believe that the opportunity is there for minimum 200 basis points that we should be able to bring in on the existing portfolio itself.
Okay. You spoke about a 12 to 15% growth in the FMCG business, right, that you're looking at. I just wanted to clarify that is for FY25 and FY26?
So this has been our consistent growth rate throughout. Okay. And we are confident.
So going forward, what will it be? Okay, it will continue to be this level.
it will be 12 to 15% growth consistently on the FMCG side. We should be able to maintain.
So the FMCG business is now more than 30% of your overall sales. Over the next 5 years, how much can you take that contribution to?
No, that's a great question. So I just want to sort of take you back 2 years back when we did the announcement for our foods business. We had stated as a very clear strategic intent that we will make it 50-50, the share of food and edible oils. And with this acquisition on an annualized basis, already the share, if we keep the edible oil flat, is nearly 36% now. And our confidence is that in 3 years' time, we should make it 50-50. That may take a year additional. That would happen because the edible oil is growing at a slower rate and the FMCG businesses are growing at 12 to 15%. But we are reasonably confident that in 3 years' time, we should be 50-50 between the edible oils and FMCG.
So once the FMCG business gets to 50%, is there more margin levers that you can unlock? I mean, for the consolidated business?
So without a question, I think, the FMCG business at that scale, the distribution strength that we bring in, with this acquisition, we'll sort of, become way larger on the distribution side as well. So we certainly believe that the efficiency levers, the multiple different opportunities that will show up at a scale of business that we're talking about, which is nearly more than 20,000 crores, I think would be very significant. And the second part I wanted to highlight was that the opportunity for the uniquely positioned, products that we have, which is almost like as a right to win, for the emerging trends on the health and nutrition side, we believe that Patanjali will continue to lead the way, and a lot more efficiencies we should be able to bring it in the system, and which will help both in terms of the margin profiling of the business and also the growth momentum which India, as we are seeing, the consumers are gravitating towards.
All right, Mr. Asthana, you all will be paying a royalty license fee of closer around 3% annually. What are you getting in return?
So we're getting a lot in return. So, for example, we get the brand sort of available to us, all the licenses and patents that Patanjali has, all the registrations they've done over the years, entirely everything accrues to us, for paying 3% royalty, the license fee that we're paying them. And this would be available for 20 years with no increase in charges or anything. So it's pretty much flat. And our belief is that with the increasing margins that I spoke about, 200 basis points of efficiency, this also, the net cost to the company post the efficiencies, etc., should be just about 1%.
Okay. All right. You want to give us a rough market share for each of these categories of the acquired business? And where do you see that this market share is headed? If you could have some rough numbers.
So in Dantkanti, our belief is that and I'll focus more on that because the others are little cluttered categories that are difficult to gauge, the where we stand, and the categories are smaller as well. We would be close to 65% plus in the herbal dental care segment, and the rest of them are today of not that large a size in terms of to define it, because the home care products it's a very wide category. Likewise, the hair care segment is also very wide category. But if I were to categorize this as a herbal Ayurvedic specific category, then this would be pretty dominant shares, and I would not be able to give out the numbers right now for those.
Okay, thanks a lot for joining in and all the best. That's Patanjali Foods. By the way, the stock is up almost about 3% odd. So definitely going to be a stock on our radar today.